You can go your own way. Well, the Mag 7 certainly has done that, right? They've been scattered all over the place. I mean, what a difference a year makes. Take a look at this. Last year's ranking versus this year. So these stocks were in the top 10. They were all over the place. And of course, they're pretty scattered right now. Tesla, for instance, the number 10 stock in 2023 is now the number 495 stock of the S&P 500. It just, Apple was 63, now it's 369. They have gone their own way. I want to bring in now EntrepreneurShares COO, Eva Ottos. And Eva, I just got to ask, I mean, how surprised are you that the overall market has been able to hold up this well despite some of these major names trailing big time?
Well, not that surprised. It's a stock picker's market, and I think investors reward companies that are able to grow their margins and have extraordinary revenue growth and profit growth, and we just don't see this with Apple, Microsoft, or Tesla. They are great companies, but their best years are behind them. You know, we haven't owned these companies last year, and we still beat the Russell 1000 growth by more than 10%. So that shows that you can have great returns without owning all the Magnificent Seven.
Yeah, no, I agree with that, but their weighting is so powerful in these indices, though, particularly the S&P, that, you know, I know you could beat it inside an individual portfolio, but I'm kind of impressed, to be quite honest with you. By the way, speaking of being impressed, I usually wait to the end of the segment, but I got to bring up your track record because you've knocked the ball off the cover. We try to go back a quarter, you know, the last quarter someone was on with us. You had Arista up 77%, Google up 67%. ENTR, which is yours, up 45%, but SMCI, the sort of, I guess it used to be NVIDIA for poor folks, but not anymore. That's down. That's the only one that you had that was down. Are you still along that right now? Yes, definitely. We still love it. It's a great company. It's still up 226% year to date. So it's been down in the last couple of weeks, but it's still a great company. They have been a long-term partner to NVIDIA. They are growing together. They provide extraordinary servers, and so it's a great AI play. And I think they are actually good priced now for someone who might want to get some exposure. We always have to add a caveat with that one, though. Ultra high beta makes big moves. NVIDIA is reporting Wednesday, a proxy now apparently for the entire economy. What are you expecting? Well, betting against NVIDIA is like betting against AI. So you know how I feel about NVIDIA. We've owned it since 2010 when it was a $5 stock. We still own it, one of our biggest weights. We still believe in it. This is a company. It's a $2.3 trillion company that's growing like a startup. They have 126% revenue growth when the rest of the category is -5%. That shows that this is one of the leaders that's able to get all the market share from their competitors, and we've never really seen that before with any other company. Right. Yeah, it's a great company. I'm optimistic. Yeah, the bottom line is that they really don't have any true authentic competitors right now in the hottest global market in the world. Let's talk about a couple of new ideas from you, right? One is C Limited, SE. Full disclosure, my subscribers also own this one. Oh, yeah. So, C limit. So, because as you said, the indices have grown appreciably in the last few months, and they have now reached an all-time high. I'm starting to look at opportunities in other geographies. So, C Limited is the Singapore story, but it's really a global story because not only is it has the most revenues in Asia, but their biggest revenue growth is in Latin America. And this is a company that's down 80% from their COVID highs, but they have increased their revenues by 7 times in the last 5 years, and they have cut their workforce by 10% 7 months ago, which allowed them to turn the corner, and now they're profitable. So it's a great story, and I want to mention many people won't realize it's not just a digital entertainment play or an e-commerce. In fact, what's now happening is they're turning the eyes that they got through their e-commerce platform and digital entertainment into their fintech solution, C Money, which now has gone from losing $600 million to making $500 million. So that's what makes us so optimistic that if that segment grows, right, that can be a great thing for the company. I know you also like Toast, which is interesting because in my book, Unbreakable Investor, I have an entire chapter on how people can find new ideas and I have the case study is on toast. It's up a lot. We don't have time to go into the details of it, but love having these conversations with you, Eva. Thank you very much.
Thank you.